how do the Uniform Rules for Forfaiting, or URF 800, impact forfaiting transactions?
How does insurance serve as a risk mitigation technique in trade finance?
Why is it important to understand the different rights and obligations and the ability to negotiate or transfer between parties?
What are the fundamentals of trade finance and why is it important for global trade?
Perhaps you could tell us a bit more about the trends in electronic trade documents and the digital standards.
These instruments are usually discounted without recourse, meaning that the seller gets paid upfront and doesn't bear the risk of the borrower obligor defaulting at maturity.
So it's a very useful tool to be able to then achieve more and keep doing more business where otherwise they'd have to turn down the customers.
Credit insurance is used as a risk mitigation to provide protection against political, commercial risk and credit default.
If you've got payment risk on a buyer or a group of buyers, obviously the significance of one buyer going insolvent is going to be much less if you have 10 buyers than if you only have one or two buyers.
We have letters of credit, so that's documentary letters of credit and standby letters of credit.
Bankers are not all bad. We do quite good things, particularly around facilitating international trade.
It's enormously active. The EU really is the leader here with the taxonomies and the directives that are beginning to come into force. It's a very confusing area for them.
The role of fintech platforms in financial services is to improve the customer experience, help companies capture additional revenue, improve operational efficiency, and meet regulatory requirements.
Welcome to Trade Finance Talks, your go-to trade, treasury and payments podcast, brought to you by TFG.